Hello, good day. Over the next 15 minutes, I want to take you inside the strategic mind of one of the Sri Lankan most extraordinary company that has existed for over 150 years, survived several wars and also the global pandemic as well, and has come out of all them not just standing but growing. I'm talking about John Keys Holdings PLC, one of the Sri Lankan largest listed company. So this is the roadmap for this presentation, and let's start from the vision and mission statement. Let me begin where the all strategy begin with purpose. John Keys Holdings defines its vision as building businesses that are leaders in the region, not just in Sri Lanka, in the region. This is an ambitious statement for the company headquarters in Colombo, and it shapes every capital allocation decision in the group makes. The group's mission is grounded in four pillars: the positive investment philosophy, a bold approach to grow, and the unwavering commitment to ethical standard delivery. These are not words on a wall. They are institutional through what John Keells calls its five-step strategic filter. Every investment decision is running through a financial filter, growth filter, and strategic fit assessment, a complexity filter, and a sustainable filter. Before a capital commitment, the 100 rate of sets at a 15%, the weightage average cost of capital, and now project clears that gate without meeting it. Strategically, FY 25-26 marks that Chairperson Mr. Krishan Balendran explicitly called an inflection point of the most capital incentive phase in the group's history is now completed. The three major projects, the City of Deep Sri Lanka, Integrated Resource, the West Container Terminal in the port of the Colombo, and the BYD new energy vehicle business have all become earning contribute within a single financial year. The direction is ambiguous, the capital development to cash generation. To undertake John Keel's strategy, we must first understand the environment it operates. In externally, Sri Lanka recorded 5% GDP growth in calendar year 2025, the strongest post-crisis recovery in years. Gross official reserve rose 6.8 billion US dollars by April 2026. The IMF program is on track. Tourism suggested 2.36 million arrivals in calendar year 2025, the highest on record. These macro Taiwan are now incidental to John Keells. They are the soil in the which is portfolio growth. But the external environment also carries real risk. The Middle East conflicts that escalate from the late February 2026 disrupt tourism flows, raise fuel costs, and added foreign exchange pressure on the Sri Lankan rupee, which is despite to the approximately 140 rupees by the US dollars by mid-May in 2026. John Keells carries a USD $189 million dominated term loan and is waterfront property subsidiary, and even 10% depreciation direct translation loss. This is not a theoretical risk, it's a materialized as an 3.86 billion exchange loss in financial year 25-26. Internally, John Keel's resources and capabilities are formidable. Used in the value framework, value, rare, immutable, and organization, several capabilities stand out. First, its brand and institutional trust. John Keells was named a Sri Lankan most respected entity by the LMD magazine for the 20th consecutive year. There is, yes, impossible to replicate overnight certainly. Second, its advantage analytically capable. OCTAVE, the group internal data and analytical center of excellence, now operate across 7 industries group with over 60 use cases in the active production. This is not an IT department. This is a strategic competitive weapon embedded in the pricing, supply chain, customer retention, and distribution. Third, the land bank of the 121 of acres of freehold and the land prime tourism location and 24 acres of premier real estate in Colombo assets and appreciate without additional capital expenditure. And the fourth one is its port position. The 42% stake in SAGT and the 34% stake in the newly operational West Container Terminal, both strategically located in the east-west shipping lanes, positioning Colombo as a regional hub. John Keells does not compete a single dimension across the 6 industry scope. It simultaneously deploys three of four three of the Potter's generic competitive strategy in consumer food, the Elephant House beverages, and Emorich ice cream business. This strategy is differential focus, premium positioning, brand loyalty, over 100,000 outlets reach, and the launch of local manufactured extruded ice cream products make a deliberate pre-minimized move in the market where per capita ice cream consumption remains a fraction of regional peers. In the supermarket business, with 147 Keells outlets, and the strategy is cost leadership through the scale. Some stores' sales grew 14% of footfall, grew 14 points and 3%. The distribution centers, the state-of-the-art facility serving up to 250 outlets create structural cost advantages of small competitor cannot replicate. But the most powerful competitive strategy at John Keells is perhaps the largest behavior digital differentiation. The Keells Nexus loyalty program has 2.11 million active members. Within 1.5 months of launch, the Nexus app exceeds 200,000 downloads. The group uses advanced analytics to optimize the pricing, promotion, and supply chain, and the customer experience across the whole business simultaneously. And in era where data is now oil, John Keells has built a refinery. And in the leisure industry, cinnamon hotels, the Sri Lanka, the Maldives, the strategy clearly differs through the experience. The City of Dreams Sri Lanka positioned not merely a hotel, but a South Asian first fully fledged integrated resort, completing the Singapore's Marina Bay Sand for the regional MIC meetings, incentives, conference, and the event market. Strategy without timing is just wishful thinking. What makes John Keells remarkable in FY 25-26 is an extraordinary precision of strategic timing. The City of Dreams Sri Lanka, which took 7 years and over 1.2 billion USD dollars to build, opened fully in August 2025, deliberate time to capture the strongest post-pandemic tourism Sri Lanka has ever seen, with arrivals at record heights. The casino operated in the immediate improving performance trajectory. The West Container Terminal Phase 1 reached full utilization of the 1.6 million TEU capacity within its inaugurated year. A piece of absorption of the port is Colombo officially themselves described as exceptional. The John Keells SG Auto, the BYD partnership, handed over 10,081 new energy vehicles. It is first operational year capturing approximately 37% of new vehicle registration in Sri Lanka following the lifting of the 5-year import ban. First mover advantages executed without a tech precision. Simultaneously, the group executed 4 strategic divestitures: T smallholder factories, the Fair First insurance stake, the Candy Walk in owning entity, and the other non-cross assets, collectively freeing up approximately 3 billion rupees of capital of redeployment. The strategic logic was clear: existing low return legacy asset and double down high ROC growth sectors. The scope of the operation is equally deliberate. John Keells operates not just in Sri Lanka but in Maldives for leisure, Bangladesh, Myanmar, and Maldives for banking through NTB, the Indian through Elephant House Beverages brand partnership with Reliance Consumer Products, and globally through its port adjacent banking business. This is a regional strategy, not is just a local one. Let me now discuss perhaps the most analytical interesting aspect of John Keells' strategy, its corporate portfolio design. John Keells is a diversified conglomerate, and I want to be precise about what that means because many companies use that label without earning it. True diversification means that when one business fails headwinds, the other compensate. In FY 25-26, this played out of with an mathematical elegance. When tourism was disrupted by the Middle East conflicts in March 2026, the bunkering facility of Sri Lankan Marine Service benefited from the exactly the same conflict as a supply chain disruption, increased vessels static through the port in Colombo. The beverage business grew its volume by 18%, partly because of competitor faced supply disruption when the new business saw demand moderate as planters release normalized. The supermarket business delivered 14% of the store sales growth as an industrial sector. The Ansoff matrix offers another lens. John Keells operates across the four quadrants simultaneously: market penetration in supermarket, product development in consumer food with the new extruded ice cream line, market development in the new region, and diversification with John Keells, and CODSL representing the entirety a new business category. The NTB acquisition of HSBC Sri Lanka retail banking franchise for 18 billion rupees completed May is another textbook move. Inaugurating marketing development is high ROC financial service segment, acquiring over 200,000 consumer accounts and established branch network and the stroke. But in the group owned frameworks is more sophisticated than Ansoff. Its five-step filter: financial, growth, strategic filter, complexity, and sustainability ensure the capital is not deployed in the sediment. Group EBITDA grew 75% to 8.01 billion rupee. But the compensation tells the real story. The retail segment, dominated by the John Keells, and supermarket contributed 31.7 billion rupees or 40% of the total. Transportation contribute 9.6 billion, leisure 12.5 billion, financial services 11.4 billion. Not one segment overwhelmed the other into irrelevance. Behind every gate strategy is an organization capable of excluding and JKLs employs 18,558 people with 25,307 including non-employee workers. The gender ratio is 64 of 36, male to female, and the group is actively working with close through the one John Keells diversified initiatives. Now let me bring all together with the numbers. For the financial year ended 31st March 2026, John Keells Holding delivered revenue of 528.85 billion rupees. John Keells Holding is not just a company, it is Sri Lanka's strategic optimism expressed in balance sheet and business model. And if the past year inflection point, it is a chairperson believe the next chapter may be the most important one in 150 years. And this is the end of the presentation of the strategic analysis of John Keells Holdings. Thank you.